This is a call that I am so excited to check in on. I haven't talked to the hub in a month or so. So we're going to talk with Carlos, Matt, Ty, Elaine, and we're just going to figure out what's going on in their environments, their world, see what's going on in Fresno, see who else we can help. And we are going to start with the one and only Carlos today, the guy that is always smiling. What's going on, man?
Yes. Hey guys, everybody, welcome back, Mike. I'm glad to say the first one to see you. I'm glad to see you.
Thank you, buddy.
Hey, at an apartment complex where I guess the management company needed to get some fixing for some Section 8. I'm going to give you a glance of books, and then here we go.
Good. Folks, and Carlos is obviously a part of the hub. He does work for me. He's done flips for me, done all of that stuff. He does repairs. There we go. Check it out. Real work going on.
Yep. So we're just replacing the countertops, doing some repairs on the cabinets. So all my landlords out there, if you need some repairs, definitely give us a call. We'll take care of it.
Yeah. Section 8 inspection is something I know very well. They will, find chip tiles and carpets and things like that, safety hazards. Oftentimes the repairs aren't gargantuan, but they need to be done. Carlos can take care of those. Carlos, if somebody wanted to reach out, get a quote, see what's going on, how would they do that?
Well, definitely give us a call at 559-681-8431. 559-681-8431.
Folks, and if you are an investor looking in Fresno and you're coming down from the Bay Area or driving up from Southern California, maybe you want to do it on the weekend, have them look at a project, probably be a good idea. Get a feel for what that make ready might be. Just another idea for you. Matt, what's going on, man? Mortgage rates have crashed almost 100 basis points. What the heck is going on?
Yeah, it's wild, and it's funny because when I have conversations with everybody, seasoned investors, new home buyers, and then quite honestly the general public, where I'm at Thanksgiving or I'm just talking to somebody. And one thing I do want to mention is we want to be careful what we wish for.
Yes.
The last thing we want or need, because just quickly for everybody on the hub call who's got a general understanding, probably the people watching this are probably paying more attention than just grandma, but we've been in this environment where there's not a lot of inventory for a long time, and so that's probably not going to change. The one thing that will change, and the lever that will affect real estate the most, is interest rates. If that goes down too much too fast, it's going to be ugly. Sacramento, where I'm at, as an example, we're missing 1,000 listings. We're 1,000 short from like 2019 and before averages for this time of year. So when there's not that much out there to buy, and you're like, goody gumdrops, I can't wait to get a 6.5. Well, you're going to now pay $550 because there's 14 other people that also are excited about 6.5% interest rate. So it's an interesting dynamic. And coming from the mortgage guy, people are like, well, wait, you're supposed to be doing backflips and excited about lower interest rates. Maybe, and kind of, right?
Yeah.
but like,
you're so right about, you talked about Sacramento being down 1,000 units, and I want people to realize it's worse than that, because something else that's going on behind the scenes is we have a bifurcated market. The luxury market is not as impacted by this, right? Where we are feeling the pain and seeing the pain, and where you and I see risk, is that entry-level home. You're probably 300% short of where you should be. So it could be 1,000, it could be 2,000 of entry-level homes you're missing. Hence, you're right. If we went from 8.03 to 7.09, almost 100 points in 3 weeks. If that trend continues and we get to 6.5 by Christmas, watch out for January. It won't be good. I've been very clear. I don't want that to happen, because I know what the end result of this. We are going to have more demand for entry-level homes. The biggest problem for me is it takes the wealth gap and it makes it bigger. It makes it harder to get on the property ladder. And I believe getting on the property ladder is the most important first step for most people. I don't want us to rip to 6.5. That would be bad, man. That would be so bad.
Agreed. So let's chill. We'll see if we got some jobs numbers and stuff this week. So we got more more exciting stuff coming as far as rate volatility, but we'll
the other thing that happened while I was gone that I just want you to touch on, because you're the mortgage guy, is didn't FHA come out with new loan limits?
Yeah, FHFA came out with the new conforming limits. You know what's crazy is Sacramento got downgraded. We're no longer a high balance county. It used to be like, nationwide, you've got one limit. And then if you're in, Los Angeles or the Bay Area, your limit, you got a high balance limit that's higher than conforming. And depending on the cost of the county, some are higher than others. The Bay Area is $1,089,000. Now it's 1.1 and some change.
Wow. 1.1, Ty.
Went from having you can buy, I did the math. You can buy 1.2 million with 5% down in the Bay Area and get a conventional loan. So San Mateo, Santa Clarita, all the fancy Bay Area neighborhoods, and then there's some down south as well. And that goes by county. So if anybody has questions on that, their mortgage person should be able to tell them, oh, you're in this county, here's the limit. Above that, it's jumbo. But those changes came out, and they go off of the year-on-year price appreciation. Sorry, Crash Brothers, like we still have price appreciation.
Yeah, there's still a positive number in front of that. Yeah, there's no negative number.
Limits went up. Yep.
That's crazy. All right, Ty, you've been doing this for 30 years. You and I talk every week. We do the weekly wrap up, which I appreciate. Thank you for doing that while I was gone. People loved it. I loved it. You did an amazing job. Frankly, you should probably do them solo from now on. They're just so good. But what's going on in your world, man?
Oh, no, that was fun, first of all. And I got to say, you always make it easy because you do the daily financial news. Even when you traveled, you were doing them at least 3-4 days a week. Felt like 4 or 5 days a week. So I just literally follow your lead as always. So thank you. That was a great opportunity. It's interesting, and I'll just go to what the topic is today: low inventory. And so as an example, I had to sit down with a good buddy of mine, Alex Lear. He's in Silicon Valley. And this guy's very analytical. Every week he looks at all the different cities in Silicon Valley, and then even looks at a couple of East Bay cities across the board. In Silicon Valley, if you take San Francisco, San Mateo, Santa Clara County, and then even most parts of Alameda, I'm in Alameda, Contra Costa, Solano, across the board, inventory, we're running at about a 2 to 4 week supply. And there were just maybe like the city of Oakland, as an example, had about a 6 week supply of inventory. So inventory, just so you guys know, a normal market, what I was taught for the last 30 years, a normal market would probably be about a 3-month supply. So a 12-week supply of inventory, 12. And then even some people would say 3 to 6 months supply would be quote unquote normal, stable market in terms of inventory. Michael, your thoughts on that? I see you.
I think 4 months feels about right. For the longest time, people talked 6. I don't think we live in an environment like that anymore.
No.
I think technology has shortened that.
Yeah.
I think, if I were to pick a number, I would say 4 months is normal. That's what I would
Perfect. Say. So I'm within the range. And again, I'm just speaking from experience and conversation of what I've been taught. But this is interesting that ultimately this is Back to the Future. And Michael, you've been talking about Michael and what year did you do the 50-year chart?
I think I did the 50-year. I had to have done it in 2020. Hence, it was a 50-year spreadsheet. That's what it started in 2020. It's now 3 years old. Hence, it's the 53-year-old spreadsheet. So 3 years ago, we were calling it, and it's been right every year.
Yeah. And so we were talking about, man, it feels like the 70s and 80s. It feels like the early 80s. And that's my first memory of real estate as a kid. My folks, buying a deal subject to back in like 83. And so, rates were like 12 or 15%, and they took over an 8% mortgage and thought they hit a home run, felt like they emotionally hit a home run. So I think we're just in a unique market like that. With that said, I think there's going to be a lot of opportunity. I am a little worried about the frenzy of, there's this frenzy of low inventory and then the rates come down. That's going to be a problem. But also too, I know that there's still going to be a lot of distress, and something, Michael, you've been talking about that I'm preparing for is Q1 and Q2. Are we going to be in a recession? Are we going to have negative GDP? And what does that look like? Where are the opportunities? So folks, I think there's a lot of opportunity in 2024.
Yeah, I could agree more. I think one of the things that's becoming really obvious the more that we go through this is the business cycle is real. Recessions happen. I started reading that Robert Allen book. You and I were talking about Robert Allen. God, it might have been 2 or 3 months ago, and we actually did it on the video. I think I went to Amazon and I found the original edition, first edition, 1980. I'm about halfway through it. It's amazing to read a book published in 1980 and just see how similar it is today. 53 years later, it's like the only thing that's different is the price. All the prices are higher today.
Yep.
Yeah, the prices were lower back in the 80s.
Spot on. So spot on, though. It's spot on.
Wild, wild, wild. So Elaine, what's going on in the insurance world? Is it calming down? Or more people leaving California? What's going on in insurance?
Unfortunately, we have had another company leave.
Ah,
And so
I thought it was over.
I know. I think we're going to look at more regulatory changes that are going to happen in 2024. For now, we're just working with the companies that we still can, although there are caps, Safeco will write it as long as it's both home and auto, but they'll only give each agent so many policies they can write per month in California. So there's a lot of caps on business, or a lot of they're only taking homes that are built within the last 25 years. The commercial part of it is a lot easier right now. Buildings like yours, your apartment complex, any commercial owners, if they own like a property management company and they just own 6, 10, 12 houses, that's much easier to write, or commercial buildings. But we still are, we still have a few markets and carriers available to write personal home and auto, or if they have a couple of dwelling fire policies. So we're still working with it. It's just, it doesn't happen, as quickly as it used to. We used to be able to just see a risk and know where to put it. And right now everybody's got their caps and regulations and underwriting criteria that we have to be able to, know where we can put these clients.
Well, do me a favor, Elaine. I know there's a lot of people still getting cancellation notice. I know there's a lot of people investing in California that need to have an insurance broker like yourself in the Rolodex just to know more people, because you may not need Elaine today, but you will need Elaine in the future. Elaine, if somebody wanted to reach out to you to get connected, to see what's going on, how would they do that?
They can call or text 559-696-9196, or they can email me at elaine@fastsavings.co. That's the best way to get a hold of me. And they are, I'm glad you said that, they are going to receive more non-renewals. Safeco's sending, a few of your clients actually reached out last week that are receiving non-renewals on triplexes and duplexes and quadruplexes. So if they own properties like that, they are going to get non-renewals.
Folks, it's happening out there. And again, do me a favor. You have an insurance agent, you like them, they're taking care of you. One of the goals of One Rental at a Time is to grow your network. Just reach out to Elaine, have a quick 10-minute phone call, 5-minute phone call, talk about what you're doing. Be clear. You're not asking for a quote or anything, but just have a broker in your back pocket just in case. And again, the phone number is 559-696-9196. Right, Elaine?
Right, that's it.
Very, very cool. Well, Ty, we're going to go backwards and wrap this up. Ty, if somebody wanted to reach out to you, or maybe, just maybe, get that free course that you put together around creative financing, where would they get something like that?
Yeah, just email me, ty@tylg.com, ty@tylg.com. I have a free course. It's a creative finance course for realtors. Anybody in the One Rental at a Time community can have it. I created it for the One Rental at a Time community. So yeah, just email me and I'll send you guys the link. It's free. It's on Kajabi. And I'm also going to be redoing it over the next 60 days. So I'm going to be adding to it, kind of just improving it, if you will. So nice. Super excited about everything we're doing.
Awesome, buddy. Matt, if somebody wanted to reach out to you and say, oh my gosh, rates have fallen. I actually had somebody tell me today, Matt, tell me if this seems reasonable. Good credit, owner rock, 2 points, quoted 6.5.
For sure.
Seem reasonable?
Yeah.
Oh
yeah. I mean, I looked at something this morning with no points at 699. So
shut up.
Shut up.
No, shut up. 6.9.
So 2 points might be 6.25. Again, I'm going to reiterate, I'm looking at a chart for the last 4 weeks where interest rates have gone down. 4 weeks in a row, mortgage applications have gone up. And so that's something where, if you're in the market to buy, you don't want to wait until rates are 5.99 and everybody is in the game with you. There's still, in my eyes, opportunity to go out there and find deals on stale listings that nobody else wants. So greatmortgagebroker.com is a quick form. Greatmortgagebroker.com. Connect with me and my team. There's resources on mtmg.com, but you want to be ready for the opportunity. You don't want to look back and go like, look at all the excitement that happened. Look at all these deals that got picked up when you're in the thick of it in May.
Did you just tell me no 0.699? Did you just say that out loud?
Yes, sir.
And people are asleep at the wheel, Michael, right now. It's like, it's going to be crazy in January. It's going to be, with the low inventory, it's going to be the Wild West, man. It's going to be crazy.
I agree 1,000%. And that's why I'm like, you know what?
People should jump on it now.
Oh, shit. All right. Oh, that I felt that one. I felt that one. Oh, that's not
This
good.
is not an offer to lend, and so again, people are going to call and be like, I'm putting 3% down and my credit score's 672. Like,
Not you.
all those
That's
things
not you.
affect. 25% down, 805 credit score. Yes, I can get them 699 at no cost when they're buying that, but still.
One more time, where do they go?
Greatmortgagebroker.com.
Carlos, we're going to bring it home. We started with you. We're going to finish with you. If somebody want to get a quote, repairs, flips, make readies, add a great person to their Rolodex, how are they reaching out to you, man?
Definitely give us a call at 559-681-8431. 559-681-8431.
Guys, all of you are amazing. Thank you each individually, from Olivia and I to you. The community loves you. You guys make the hub stronger, better. I'm still a little out of wind for being punched by Matt. I did not want to hear 699 because I'm legitimately afraid of what that does in January. I'm legit. And again, let's be clear. I own a bunch of shit. This won't affect me, but it will make it harder for a lot of other people, and that scares me. Guys, have an amazing day. You're amazing. Bye.
Bye.